You guys ready?
Yeah, let's do it live and then we'll.
Yeah. Alrighty. Ready, set, 3, 2, 1.
Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hoff of Pacific Private Money. And we have a special guest today, Mary Jo Lafaye, who's going to discuss reverse mortgages in the second segment.
All right.
Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate to give it away during this show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is general trivia. Mark, you got an article you want to share with us?
Well, before then, I just wanted to say hello to the audience, and it's nice to be back. I've been intermittently co-hosting Best of Investing last few months, and slack's been picked up by Nam Phan, notorious Nam Phan, who's been a great stand-in, and probably, maybe you have to take a poll with the audience. Maybe they want to replace me with you.
Yeah.
The one vote will be my mom's.
Yeah. He's on mic number 4.
It's been an exciting week. The weather's finally turned. It looks like we might be done with the rain. Spring's out. And so what does that mean, for investing? Well, of course, you listeners to the Best of Investing know that we love to talk about real estate here because at Pacific Private Money, we're real estate lenders. We also accept investment funds from people who want to earn money secured by real estate. So we like to sell money to borrowers, and we like to pay for money from our investors. Easy for me to say. But it's been a great week. Weather's good, and sales are starting to really pick up. The realtors that I talked to are really excited about the open homes that are happening now. It was interesting. It actually was kind of a slow start. And it's funny how the weather impact that. In fact, I have a personal experience with it. I've got a home that we bought to remodel and put it back on the market. We put it back in early January thinking that, well, maybe the market would be so hot after the holidays that it would fly off the market. And it actually didn't. We got some, few offers. They were a little bit disappointing. And so we did what a lot of investors will do when they don't get the pricing they want. We pull it off the market for 30 days and in that 30-day period right now. And looking forward to getting it back on the market in a couple of weeks. And people that I've talked to who just recently did the same strategy have found that they put it back on the market, and it was amazing how different all of a sudden the offers were.
Did they change the price?
Well, they changed, I think, what they put it out at. I mean, it's such a strategy, and every market's different, whether you're in San Francisco or if you're in Oakland or if you're in Marin. You really want to work with a local agent who knows that market because, in some markets you want to price it really low to generate a lot of fervor and activity. Now, what we found is we actually put it on too low in the Oakland markets, and we didn't get the value that we thought we should get. So we're going to turn around and try a different strategy next time. And, stay tuned. We'll see what happens. But I think that the net of it is you always want to work with an experienced real estate agent, in any market where you're going to list your home, whether it's your own home that you're selling or an investment property, and listen to what they have to say and then take their advice. Because the mistakes that I think I've made in the past couple of years on trying to sell homes in markets that I wasn't intimately familiar with was that I would say, well, I think we should do this. And the agent said, no, we should do that. And it turns out that they were right and I was wrong. And we had to go back and revisit that strategy. So
that's the same thing with like staging. I mean, I remember when we sold our house over 10 years ago, I thought the staging personally was not my taste at all. And I thought, but I'm going to defer to the experts. And then sure enough, we got an offer really quickly.
There is an art to staging, and in most stage houses, you can't live in that staged house.
Exactly.
But it's designed to make it look roomier and livable and welcoming, and it's an art. And if you work with a good stager, in fact, you really need to stage your house if you want to sell it and get the price that you're okay.
Edward, also, people don't like purple.
That's the thing. I said, listen, I don't care what color it is. If whatever color will make it sell. It was so funny too because they decided to take the kids' bathroom and they put all kinds of ducks, around and whatever. And my 7-year-old, she was 7 years old at the time. She said, "Daddy, they ducked up my bathroom. It's all ducked up." And I go, "Yeah."
So, and the markets this week were interesting. The stock market's been really erratic lately. We had another, semi-plunge this week, and Trump said some things about Amazon, and that stock went down. Facebook stock went down because of bad press. And, it's really, it's interesting, we're getting a lot of inquiries from people who are, taking some of their profits out of the marketplace and looking for alternatives. And we are the king of alternative investments when it comes to real estate secured investments. So if you're sitting on a bundle of cash right now and wondering what to do with it, give us a ring at 415-883-2150. That's Pacific Private Money, and ask us about how you can earn as high as 8% on your money secured by real estate. And we only have a 1-year lockup on the fund right now.
Well, I think the best part is that the principal stays the same.
Yeah,
So
absolutely.
you can go to bed at night just kind of relaxing. Tell you what, we're going to cut to our first commercial break here. And again, talking trivia theme is general trivia. And our guest, Mary Jo, who's been sitting very politely here. If you know the answer, don't say anything until we get back, all right? What board games tokens include a rope, a lead pipe, and a candlestick? Call 888-912-1190. For the first caller with the correct answer, you're going to win that tanning certificate. What board games tokens include a rope, a lead pipe, and a candlestick? Don't touch that dial. The best of investing will be right back.
Excellent.
Do you have a clue? That was the clue.
Actually, that's a good. Why don't you leave it? I'll do it. Say, Mary Jo, do you have a clue?
And you go, I haven't a clue.
Yeah.
Give me a clue.
Okay. Yeah, and say, give me a clue, and then because I do have a little clue here for it. All right, so that's segment number one.
So what was that? A rope, a candlestick?
And a rope, a lead pipe, and a candlestick.
Wow. That's an interesting combo.
You don't know?
I don't. Is
You don't have a clue?
You have a clue?
I have 3 clues. I still
Okay.
don't know.
Okay. All right, that's good. That'll work. That will work.
That'll work. That'll be fun.
Okay.
Okay.
All
All right, next section is 828. Okay, 3,
Yeah.
2, 1.
Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. First trivia question: what board games tokens include a rope, a lead pipe, and a candlestick? Mark.
I need more clues.
Okay, Colonel Mustard in the library.
The answer is Clue.
Clue, yes, board game Clue. Very good. All right.
Mary Jo obviously didn't play that growing up.
You're too young for that game.
I was baking cookies.
Okay, there we go.
Oh, the Easy Bake Oven.
Oh, yes, I remember that.
Next trivia question is recipes.
Yeah, exactly. Okay, so in the studio here, we have Mary Jo Lafaye, who is a specialist in reverse mortgages. And Mary Jo, I mean, I'm going to guess that some of the audience knows what reverse mortgages are. If you could give us a summary, and I know the rules have kind of changed a bit.
The rules have changed a lot, actually. Over the last few years, we've had some major improvements to the program guidelines and to the protections for the borrowers.
Okay.
We now do a financial assessment, which allows us to ensure that the borrowers will have enough ongoing income to cover their property charges, including property taxes, homeowners insurance, HOA dues, if there are any. And if they don't have enough ongoing income that we can assure they'll be able to pay those, which protects their ownership of the property, then we can set aside some of their loan proceeds to pay those for their life expectancy. So it protects that the borrowers will be able to stay in the home for the rest of their life if they choose, as long as they can pay those property charges. So that's what.
Okay, and then without being, giving us actuarial computations, give us an example of maybe a scenario you've done fairly recently.
Well, we recently had a big improvement in the jumbo loan that we offer. The loan amounts now go up to $4 million.
Wow.
So of course you have to have a $8 or $9 or $10 million home to qualify for that, which we don't run into every day. But I do have a lot of clients that have homes ranging from $2 million to $7 million, and they were not being able to borrow enough from the FHA home equity conversion mortgage. That's the new technical name for the revamped former reverse mortgage. So the FHA insured home equity conversion mortgage will loan somebody a portion of their home equity, which is capped at $679,000. And that doesn't mean that the loan amount could be up to $679,000 initially, although as a line of credit, it could grow to that value over time. It means that they can borrow a percentage of their home value or a percentage of $679,000, whichever's less. So in the area that I serve, which is primarily the Bay Area in California, most borrowers can borrow a portion of $679,000, which ranges anywhere on average from $275 to $475.
And do they take it in one shot, or do they take monthly?
Well, about a third of the people that call me are realizing that having a mortgage payment during retirement is not beneficial to their overall income stream
Right.
and their cash flow security. So they'll use the HECM or the jumbo loan to pay off an existing mortgage, thereby eliminating that monthly payment and decreasing the amount that they have to take from their investment accounts, which are often taxable accounts. So if you have someone drawing large amounts of money from a taxable investment account, paying a good portion of that in taxes to net maybe 2/3 of that to pay a mortgage payment, which maybe only half of that goes towards principal. A lot of people find that they're taking $60,000 a year and turning it into $20,000 a year.
So as an example, if somebody.
That's not a good deal.
Yeah. So if I'm trying to clear through the smoke on this one, is someone taking money from an IRA, which they would have to pay taxes on in order to make their mortgage payment?
Correct.
Okay, so instead of taking money from your IRA and paying taxes, assuming you're not in the RMD situation, you basically just let them keep the money in the IRA tax deferred, and then they're able to draw out from the home tax-free.
Or use the HECM to pay off the home mortgage all at once. So back to your question about would they take it as a lump sum or draw from a line of credit? If they're using the funds to pay off an existing mortgage to eliminate a mortgage payment, then they'd be taking it as a lump sum. So we would refinance from a conventional mortgage that requires a monthly mortgage payment to a home equity conversion mortgage that does not require a monthly mortgage payment.
And if their existing mortgage, let's say, is $300,000, they're going to have to come. They're going to the HECM home equity conversion, right?
Mhm.
Is going to have to first come up with $300 to
Correct.
pay off the current loan to have them reconvey the loan.
That is correct. We
Okay.
have to clear all liens against the subject property at the time of the refinance. Many people will bring in cash from other resources to make up the difference. So if I have a borrower that qualifies for $350,000 on the HECM, then they owe $375,000. They would just have to bring in $25,000 to make up the difference.
And then they wouldn't draw any more money out. They
Correct.
basically would just have that kind of suspended in animation.
Correct.
But that loan would grow because they're not making any mortgage payment, and the
Correct. Right.
lender would have to earn accrued interest.
That's
basically.
right. Interest accrues over time. The borrower can make a payment in full or in part at any time. So if they take a variable rate, it's available as a line of credit, which they can use as a revolving line of credit. And I've had clients over the years take out a HECM, they'll use all the money to pay off a conventional mortgage, and then they'll inherit some money down the road. 60, 70-year-old people have parents that are 80s and 90s.
True.
So let's say they inherit $300,000 down the road, they can pay down their HECM line of credit and borrow that money again in the future. And while the line of credit is funded, while there's money available in the line of credit, that amount of money increases every month, guaranteed by HUD, even if the home value goes down. So this is really a strategic way to lock in the amount of money you can get from your home while home values are high and interest rates are low. A low interest rate will allow people to borrow more money at the time of application. As interest rates rise, the line of credit has a higher growth rate. So the interest rate is tied on the loan balance is tied to the growth rate on the line of credit. There's also a fixed rate available, and that does not operate as a revolving line of credit.
So it sounds like there's a lot more options available now. Not only do they have a shiny new name, reverse mortgages is now home equity conversion mortgage, or HECM. I like the home equity conversion mortgage. HECM sounds like you're clearing your throat. But that's really interesting. So when we get back, we're going to talk some more about home equity conversion mortgages, and I've got some questions because I've got some clients who've been talking about planning for that, and I want to ask you some questions about how do you plan ahead when you know that that's your intent, especially if you're looking down the barrel at age 62.
And talk about with the upsides and the downsides. Let's make sure we give the audience the full range. Okay. All right. Here's our second trivia question. Without looking at your computer, or cell phone. What key is to the right of the letter T on a standard keyboard? So you have to remember your typewriter on that. Don't look, Nom. Don't look. Don't you do it. Okay. Call 888-912-1190 if you're the first caller with the correct answer. You're going to win that tanning certificate. What key is to the right of a T, on a standard keyboard? And when we come back, we're going to continue on with Mary Jo Lafaye, who's an expert in reverse mortgages. Don't touch that dial. We'll be right back. Having fun so far?
Oh,
Nice, that was
That's
great.
Yeah.
Yeah, you got great radio voice.
oh, thank you.
Like what I remember, this actually happened like within the first year of us doing the show. One time, some lady called, and instead of like answering the trivia question for them, she leaves this message. It says, "I just wanted to tell you that I like listening to your show because I really like your voice."
Like, thank you.
Did she ever call back to that?
I think I blocked her call.
Yes.
Yeah,
Okay.
you never know what people are up to.
Yeah.
Are there other changes? I mean, were there a whole myriad of
Mhm.
like reforms and updates to?
Yeah, so one of the big changes, the upfront, the initial mortgage insurance premium that guarantees, that funds the HUD insurance fund that guarantees the loans, that was reduced
Okay.
to 2%.
So I'll
Yeah.
lead with a question. Like, I just want to make sure that I didn't ask you something and go, no, that was it.
So the mortgage insurance premium fund has gone down, lots of changes.
When did this all come in? When did this change come in?
They're constantly changing,
Oh, is
and
that
it's
right?
always like a surprise attack. There was a big
Wow.
one October 2nd and then January 1st.
So like a tax law.
Well, it's
Yeah.
kind of like when Dodd-Frank, when they started rolling it out, it's like every year they
Oh, yeah.
added more and more
Yeah,
and more
and
stuff.
we'll get 1 or 2 changes a year sometimes.
Huh.
Lots to stay on top
But
of.
yeah.
That's actually important to know. So if you think you know about reverse mortgages, you probably don't.
All right, folks, ready? Let's see. Okay, 3, 2, 1.
Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Mark Hunt, president of Pacific Private Money. Second trivia question. What key is to the right of the letter T on a standard keyboard?
I'm not a touch typist, so I'd have to look, and I don't remember.
You don't remember?
No.
Mary Jo, do you know the answer to that?
P.
Why?
Why?
Why? Because I said so. Why? You know, why? The letter
Because we
Y.
love you.
Because we love you, exactly. All right. So in the studio here, we have Mary Jo Lafaye, who is an expert in, I'll use the old term because I think a lot of
Reverse mortgages.
reverse mortgages, yes. And before we go, Mark has a great question for you. In case the audience wants to take down your name and number, if they have questions for you, how would they get a hold of you?
I have a local office here in Marin County. I'm at 415-259-4979. That's my office number, and you can call anytime, leave me a message. I return calls and emails very promptly.
You couldn't just get the number 800 reverse mortgage? Okay, all
A
right.
few people got ahead of me.
Yeah, I bet you, yeah. Okay.
Well, and we were just talking off the air. I was actually surprised to learn that if you think you know about reverse mortgages and you haven't spoken to anybody about it in a while, you might be surprised because she was indicating that they keep changing. Every year they make new amendments, and sometimes even during the course of the year they make changes to this home equity conversion mortgage program. So, Mary Jo, talk about some of the other changes they've made to reverse mortgage regulations.
One of the big changes we've had recently is the reduction in the initial mortgage insurance premium. These loans are insured by HUD, so they're fully non-recourse loans. Non-recourse means that the borrower has no personal liability, nor does their estate have any liability to repay the loan.
Nice.
So the loan proceeds will come from the sale or refinance of the house when the heirs inherit the property, or they can, if they've used all the equity, then they're not responsible to pay any deficiency. HUD will pay the deficiency. So the way that is created, that scenario, is that HUD insures the loans with a mortgage insurance fund, and each borrower pays a small donation to that fund at the closing of their loan. And that's called the initial mortgage insurance premium, and that has gone down.
Has it
And-
got, was it a significant reduction? I mean, was it?
It was maybe about a 20% reduction.
That is,
Well,
wow.
that's
Yeah.
significant, sure.
And then the annual mortgage insurance premium, which is only accrues on the loan balance,
Mhm.
has gone from 1.25% to 0.5%. So that's
That's significant also.
about-
So here's a question for you. Given that regulations have changed, you can get larger loans with different and varying terms, and you have cheaper mortgage insurance payments. Do you find people are refinancing their old reverse mortgage with a new reverse mortgage?
Typically, I've been in this field for 15 years, so I've helped a lot of people refinance from one type of conversion mortgage to another.
Really?
And typically it will go, some of them will get more money from a new HECM, but right now what we're seeing is that people are moving to the jumbo because the interest rate was reduced to 5.99. You can get, on average, 35 to 50% of your home value. So if you have a $2 to $4 million home value and you're pulling out $22,000 a month to pay for round-the-clock in-home care, which is a common scenario in the Bay Area, you need more than a HECM will give you, especially if you're also getting rid of a current conventional mortgage to get rid of that payment.
You know, it's interesting with all the regulations with Dodd-Frank and all that, it seems like there are a lot of people who just, they can't even qualify for like a home equity line of credit.
Right, a regular line.
A regular line of credit, so
they
they'd have-
reverse mortgage line.
Yeah, exactly. So they'd have to kind of be forced to, if they're not gonna sell their house, and they
Right.
need money to be forced to do a reverse mortgage. Is that
Right, there's a lot of current academic research that shows that what people want to do in their retirement years is make more of their assets liquid. And by taking income or money from investment accounts and paying down a mortgage, you're making more of your assets illiquid.
That's true.
And that's not going to help you with cash flow in your later years if you're paying for medical expenses or in-home care.
Well, I can just imagine, you know, the typical older family who, let's say husband and wife in their 70s, they don't, all they have is really their home is really their major asset. They don't have much in the way of investable funds, and they don't want to sell their house, but they have a lot of equity, as they call it, you know, real estate rich, cash poor,
Right.
and they don't qualify for a line of credit. So what else, you know, can they do except for get a reverse? They're kind of forced to do it.
Well,
aren't they?
some people will do a HELOC, a home equity line
If
of
they can
credit,
qualify,
if they
though,
qualify.
Yeah.
It used to be that you could qualify based on assets. It was asset-based lending, and now it's
Yeah.
income-based lending.
Exactly.
And you'd be surprised how much income you have to get, even with $1 million or $2 million in equity, to qualify for a HELOC.
Oh,
And
yeah.
then,
And we're not surprised at all, because
No.
we actually have to turn down a number of home loan requests, because it used to be that you could always borrow against the equity in your home. And as hard money lenders, as we used to be called, private money lenders now, we loved making loans against people's equity, oftentimes in junior position. Well, nowadays,
Right.
we have to say no more often than not, because we can't make you a loan unless you income qualify. There's no such thing as an equity-only loan anymore for a primary residence.
that's right.
So what are the downsides to reverse mortgage? I still call them, you start calling it heck now. What are the downsides? You know, because when you're explaining, I'm sure when you're explaining to people, you're showing them the pros and the cons.
Sure. Yeah, everybody has the same response. I do a lot of public speaking and educational seminars. And the big question is always, you know, what's the catch? And it sounds too good to be true.
Yeah.
And I had a financial advisor at one of my luncheons recently, and a woman asked, you know, this is too good to be true. And he spoke up and he said, no, it's too good to be free. It's just like any mortgage. There's interest. Interest is charged, and it's going to cost you money over time. The difference is it's not going to cost you money that you could otherwise spend. And that's the key in retirement, is that you need to keep as much money as possible in a spendable form.
Yeah, because the interest rate you were quoting before was actually a little higher than a typical mortgage. But the good news is that it's accruing.
Right. And
So
It
if you,
self-pays, basically. Isn't that one way of looking at it?
that is one way, you're
Mm.
letting the equity,
Yeah.
which most Americans retire with 60 to 75% of their net worth
Mm.
held in the form of housing wealth.
Yeah.
So if 2/3 or 3/4 of your net worth is held in the form of housing wealth, and you continue to take money from the other fourth of your assets, which are held in retirement accounts and cash accounts, to pay more into the locked up funds, you're not realizing the fact that you're in retirement and it's time for your assets to support you.
Well, also, if you are looking at the alternative of selling your house, it's not as good a deal as it used to be from the standpoint of taxes. So you actually have to pay a large capital gain, right?
I have a client in Atherton right now. Their home will probably appraise for close to 4 million. And because of their age, they'll qualify for $2 million on the jumbo. And the interest rate that I quoted you of 5.99, that's on the jumbo loan. The FHA loans are in line with regular FHA loans that people would use as a first-time home buyer and so forth. So you have a lot of choices. And your comment earlier was really the most important one for people to understand, is that if you haven't looked at this in the last few months, you should take a look again, a fresh look, because it has changed dramatically. And it's also important when analyzing these to really look at the cost of every option that you can choose. Some people just look at the cost of this, but they don't look at the cost of not doing this.
Exactly. Yeah. Again, like they talked about selling a house, paying the taxes, or taking money out of your retirement account and paying the taxes on that. So yeah, you got a couple of different buckets worth of cash, which is the one that's going to cost the least in the long run on that. Okay. Tell you what, we're going to cut to our another trivia question break here. You ready for this one?
Yep.
You should know this one. The soft drink Mr. Pibb was introduced as a competitor to which popular soft drink? That's our trivia question, all right? Call 888-912-1190. If you're the first caller with the correct answer, you're going to win that tanning certificate, which is worth over $100, by the way. And you can give it away.
And you get tan.
And you get tan, yeah. Or you can give it away to someone, it's fine. The soft drink Mr. Pibb was introduced as a competitor to which popular soft drink? Don't touch that dial. The best investor will be right back. Look at that, right on the money.
Sorry, I went over.
No,
No,
you're fine. Yeah, 9-10, we nailed it. One thing I didn't get a chance to ask you was that, just talking about so I'm assuming if a husband or wife, either or, are 62, the first person reached 62, qualifies you for reverse mortgage?
Right, the younger person would not be a borrower, but they would have protection to live in the house for the rest of their life with no repayment.
Does that matter to you when you're underwriting it, that if they're not, I mean, do you?
They get less money, so it's based on the youngest person's age.
Oh, okay, so.
Everything's based.
So it's, okay, so if you're trying to maximize, you have to both be at least 62.
Right, but keep in mind, the line of credit they set up will increase every month.
Oh.
So it's still better to get the line of credit when interest rates are low and then get the growth rate.
Oh.
Because if you wait till you're older and interest rates are higher, you're still going to get a lot less money. It's very interest rate sensitive.
Well, that's fascinating.
So another big thing that we could mention that a lot of people need is downsizing. And so they can use this as a purchase loan to increase their purchasing power. So let's say I could give them $500,000. And when they downsize, they pay off a big mortgage, they pay capital gain, they pay sale fees. They can maybe they only walk away with $500,000, which means they'd have to leave the area. But I can give them another $300,000 to $500,000 on average, and now they've got the purchasing power to stay in their community.
Ooh, well, that's really neat.
With no repayment.
So what I'm going to do here is we'll start. You guys will continue, and at the 3:35 mark, you guys won't know this, but I'll be checking in on I'll let you guys continue to talk, my plane reservation.
Okay.
I mean, I assume you don't want to just.
So this next one's just 5 minutes.
No. You guys will,
9:17.
it's 9:17, but at the 5-minute mark, I'm gonna look at my phone now. You guys will talk, and I'll just kind of.
Just trying to get a seat.
Yeah,
You're gonna get B10.
that's right. Gotta be B10. Okay.
All right, ready?
Then after you're done with your part, then we can get into the deals that we can.
Okay, 3, 2, 1.
Welcome back to the Best of Investing. Edward Brown here along with Mark Hahn. Third trivia question. The soft drink Mr. Pibb was introduced as a competitor to which popular soft drink?
That'd be Dr. Pepper.
It would be. Remember, it kind of tastes
Remember when it
similar
first
to
came
that.
out too? I kind of like that.
I know, me too.
Let's change the pace. A little bit sweeter.
A little bit?
Now back to
A little
Dr.
bit.
Pepper.
So Mark, before we get into deal of the week, you had a few more questions for Mary.
Yeah, I was, so the age that you need to be minimum to qualify for a reverse mortgage is 62, but what happens if your spouse is younger than 62?
So that's another one of the recent improvements. It used to be that both spouses would have to be 62, or the younger spouse would have to come off of title. And then that put them in a precarious situation. So HUD finally realized that was not the best way to have the program set up. They revamped it, and now we have an option called the non-borrowing spouse. So even a younger spouse, all the way down to age 18, believe it or not, can qualify
Lucky guy.
as a non-borrowing
Or
spouse. However, loan amount would be lower. So the loan amount that they qualify for initially is based on the youngest person's age.
Yeah, but at 18, I mean, you can borrow, $100, right?
110, yeah. So that has allowed a lot of people the flexibility to obtain the loan as a line of credit and take advantage of the many years ahead of the growth rate on the line of credit. Over the next, say, 10 to 15 years, the line of credit will probably double in value. So if anyone is out there that does not have long-term care insurance or has not qualified for long-term care insurance, and they're concerned what happens when they're 70 or 75, and one needs in-home care or a spouse needs a care facility, then they have this large line of credit they can draw. The draws from a line of credit are loan proceeds, so the IRS defines those as non-taxable, and it does not affect their investment portfolio, their future income on that portfolio, does not leave the remaining spouse penniless. And so it's a great way to provide for future needs today to set up this line of credit and just let it grow. And if you want to touch it, you can. If you don't, you just let the proceeds grow. And just like with my mortgage, I get a mortgage statement every month and it shows me how much interest accrued, and I have to pay that plus some principal. But with the HECM, you'll get a monthly mortgage statement and it'll show you how much interest accrued, and you can choose to pay it or not. So if you're still working and you want to pay it down to increase your line of credit, you can do that.
Oh. And then, if you pay it, you get a tax deduction for it, right?
I don't give tax advice.
No, but I can't imagine why you
Well,
wouldn't.
we believe up to $10,000.
No, that's the taxes. That's, you're thinking about the state tax deduction, the interest on the first, million or 750,000 would be deductible because it's still interest.
Yeah.
I think that applies to acquisition indebtedness or improvements of the property, but that's definitely something to look
That's
at.
Oh, that's a
good
good, that's a very good question. Yeah. Okay.
Mary Jo, give out your contact information once again for anyone who wants more information about qualifying for a home equity conversion mortgage, also known as the reverse mortgage.
Yes, so we don't need a lot of data to qualify someone. We really just need to know the party's dates of birth, their home value, and what they owe on the property. So with just a few pieces of data, that can be emailed to me, or you could give me a call and I can tell you all about the program and how it would affect your particular situation. Best number to reach me is 415-259-4979. That's 415-259-4979. And you can call any time of day or night, leave a message if I don't answer, and I'll return your call promptly. We can do a quick analysis for you and see if we can solve your problem. If we can't help you stay in your existing home, we can help you with a new program called the HECM for Purchase, which will give you more downsizing purchasing power. So that will give the average person an extra $300,000 to $500,000 towards the purchase of a new home, and the balance they would pay from the sale of their existing home. And again, they would have no monthly mortgage payments for as long as they stay in the home. Their obligation is to use it as their primary residence and pay their property charges, including property tax, homeowners insurance, HOA dues if they have them, maintenance and utilities. It's all the same things they would pay if they had no mortgage at all.
Awesome. Mary Jo Lafaye, Reverse Mortgage Advisor. All right. Is it time for Deal of the Week?
Yes.
No.
Yeah, so deal of the week this week. So this is a land deal, not something we do often.
Land?
Yeah, why would we do land? No, occasionally, like private money in general, there's scenarios that just make sense.
Yeah, because we're holistic lenders at Pacific Private Money. We'll lend on anything real estate related if we like the story. And maybe it's the real estate we like better than the borrower, or the borrower we like better than the real estate, or maybe we like both. But it's really, why do you need the money, and how are you going to pay us back?
Yeah, in this case, it's just so happens that it's land, but it's another lease option. So the repeat borrower came to us. They own a piece of land, or they have a lease option on a piece of land that
they want to buy.
Yeah, they want to buy. So the lease option to purchase price was 1.3, or is 1.3. It's actually in process right now.
Hasn't closed yet.
Hasn't closed yet.
We're working on it.
Yeah, but the value is 2.9.
Wow.
So yeah, it's
So they must have gotten into this purchase option contract near the bottom of the market.
Yeah. And the
We
12
see a
ounce
lot of
one.
these things. We've done a lot of purchase money loans for people exercising options to purchase. And usually, maybe it's 3 or 4 years is the amount of time they have before that expires, where they have to exercise or they lose the opportunity to buy at the strike price. The strike price being, what's the contract price that they need to exercise, or lose the money that they put into the property. But what we've been finding at Pacific Private Money is a lot of these purchase options that went into contract, say 3 or 4 years ago. It's amazing based on the appreciation what the prices that they're getting of it. And oftentimes we can provide close to or at or near 100% acquisition financing, because the value by appraisal is underneath our what we solve for loan to value of 70% or better.
Yeah, I think we're doing 100% on this one. And he's going to do a lot split too. So the opportunity for him to add value to that lot split is what's driving the current price to 2.9. And we had one a couple months ago, and it was a deal of the week at the time, was a Malibu deal where the lease option was expiring, and I think it was a 2.4 million purchase lease option amount, and then the property value at the time was 4.1.
And what's interesting is oftentimes these borrowers will go to a bank or conventional lender thinking that they can easily get a bank loan or conventional financing for this, but then they find that oftentimes they won't look necessarily at the market value. The lender will be focused on what is the contract purchase price and offer them a loan off of that, say 80% of that. But because at companies like Pacific Private Money, we're an alternative finance provider, we use a more holistic approach at looking at loan requests. And so we can do 100% financing if the available market data suggests that we really still have the protective equity we're looking for, and we're still under 70% loan to value. So for more information on that and other loan programs, go to our website at pacificprivatemoney.com or give us a call. We're right here in the 415. We're at 883-2150. And what's great is that we've got a whole bunch of guys on staff who take calls all day long. We can quote rates and programs and green light files over the phone. It just takes a couple of minutes, and we're not going to sell you anything you don't want. So give us a call. It's easy to call and say, hey, I got this situation. Can you help? And if we can't help, we probably have a referral for you that does. We've got a very deep database. We've been in this business for 10 years. We know who the players are. We know what we like. We know our niche, and we know other people's niches too. So again, for more information, go to pacificprivatemoney.com or give us a call, 415-883-2150.
And when we come back, we're going to have a recap and some thoughts for the day and close this baby out. All right. So don't touch that dial. If you're listening to the Best of Investing, we're going to be right back with some closing comments. Give us a little bit of extra time on that. Okay.
I need to understand a lot more about what you guys can do, because I'm sure I could send you business.
Yeah, there's going to definitely be people who that could definitely see across.
Yeah.
Reference.
So you can lend anywhere in the state?
I can lend almost anywhere in the country, just not New York.
Because I have a referral for you.
Okay.
Just-
What do I
just,
do?
He's a
See,
friend of
I
mine.
can't
He's turning
check in.
62 in May.
It does not give me
And
the
I just
check-in.
spoke with him this week. We gave him, he had no debt on his property. It's a town home in La
Did you already check?
I mean, I tried to, and it's not letting me
It's
hit the
down to
check-in.
Yeah,
It doesn't?
one
Possibly.
proposal
Mhm.
eligible for
Um,
check-in. Retrieve
He
reservation.
inherited it from his mother. I think he's on title himself personally. We made him a
I mean, if I
private
just call
loan.
Yeah, that's
Because I
cool.
tried to check.
$1,000.
Because usually there's a little
Looking
orange
at
thing.
How much is the value?
You know that I think the appraisal came in about $450.
Okay, he can probably just get enough to pay off his mortgage at his age.
Yeah.
But I can do an analysis for him.
Couldn't get it.
Well, it says tap check-in. Usually there's an orange or yellow thing,
No,
right?
no button?
No button. Hopefully it still at least did it, but
Yeah,
it's probably stupid.
didn't give you
no
your
warnings.
boarding pass.
That's what I'm concerned about.
Yeah, bummer.
I know, and then you hit this and all it does
When
is
you
go back
restart
to
your
that.
phone, maybe it's.
1 hour trip.
Ooh.
Okay, folks.
Yeah, I have a client right now in foreclosure. So she needs somebody to pay off the foreclosure, then she can sell. She's got a couple $100,000 in equity. But she's got a sale date of like April 11th.
Ouch.
Yeah.
Well, sometimes you can get a.
You can usually get an
She already
extension.
did that.
Yeah.
She already did that. She filed bankruptcy. As the bankruptcy attorney said, she already used that card.
Ooh. Is the property in the Bay Area?
It's in Panola or St. Pablo.
Okay. You ready?
You can look at it. If it might be tight. I mean, we pretty much can't really go over. Well, we can't go over 70. We can go over 70%. We typically don't. 70% loan to value, and if it's consumer she's living in there, we'd have to make sure that she's got the income qualification. That's the other thing. That's what really kills a lot of these deals.
You can't do like a 90-day loan until she sells it.
No, we're not allowed to on an owner-occupied, only for a business purpose.
Okay.
Dodd-Frank really was such a double-edged sword. It took away a lot of options for people. It wasn't intended to
Are
do
they getting
that.
rid of that?
They're not getting rid of the regulations that were enacted to support the intent of Dodd-Frank. They're just relaxing some of the banking regulations, but it's not going to trickle down to changes in lender law. It's I think ability to repay and income qualification. I think it's here to stay.
So
you might be wrong.
You don't have your 11-month bridge for something like that because it's not
It's
purchase.
not purchase,
Not
yeah.
purchase, yeah. Or even a 30-year amortization because the ATR.
Well, we could do a 30-year AM, even though we know that she's going to pay it off.
Yeah.
What is
shortly.
your, all she really needs is to cure she needs like 50
Yeah.
grand to cure the foreclosure.
Yeah, it's hard. We don't normally do that. Yeah, the bailout loans have been really difficult thanks to the Dodd-Frank regulations.
Yeah.
All right, you ready to close this out?
Yes.
Okay, because I also have a little deal to leave here too.
Okay, ready? 3, 2, 1.
Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Humph and our special guest, Mary Jo Lafaye. We didn't have a trivia question, but I've got a deal of the week also. So there was a gentleman in Tiburon. He has a first mortgage, and he actually had a second mortgage, but he needed a larger amount in order to finish off the remodel so that he could put the property up for sale. And he makes really, really, really good income. But the problem is he used all of his really, really, really good income on the major remodel on the house. So he was short a couple $100,000. So what we ended up doing was at Pacific Private Money, they made him the loan to finish off the last part of the remodel so that he could get the house ready for sale. And the loan to value on this house is only about 65%. So, and this is before he does the little remodel. So, assuming the remodel just kind of helps him sell it.
So it's basically a remodel completion or construction completion loan.
Exactly.
Which interesting, a lot of banks won't touch that, and a lot of private lenders, if you call around and they learn that there's been work in progress, they'll turn it down because there's this fear of mechanics lien exposure and an inability to get the proper lender's title insurance policy. So you may not be aware of that if you're out there with a situation like that, but we have options for people like that. We actually like construction completion loans, and we've done quite a few of them here at Pacific Private Money.
Yeah, in fact, this one, all he needed to do was just like finish off windows and really, really minor things.
Right,
so you could see that.
Well, that last little bit can be pretty pricey too. I mean, you could easily spend, you might be 90% complete and learn that's going to be another $100,000.
Exactly. Well, that's what it's expecting.
Yeah.
If he's expecting to put in 150, and when I looked at what he wanted to spend it on, I'm thinking, man, I don't think this is going to cost 150, but it's in Tiburon, so he's going to do it nice.
He's got his Thermador refrigerator and the stove.
Oh, he's already got all that.
Oh,
Yeah. All we're talking about is just like making one stair over here and putting the trim on the windows that were already installed. I mean, it's really, really, really minor. So anyway, but the thing is, if he wants to put the house up for sale in the next couple of months. So that means he's got to get the construction done right now. And if he didn't get the money, he could just save his paycheck and pay for it. He makes really good income, but that'll push him off another few months and he'll miss the season. and he wants to downsize now and move.
So it sounds like a pretty short-term loan,
Very
which is
short-term.
another thing that if you go to a lender, private lender, bank, and you tell them, I only need the money for 90 days, oftentimes they're just not making that much money on the money, and therefore they'll say no. But,
Waste of time.
the way our fund is set up at Pacific Private Money, we actually like making short-term loans because we share the origination fees with the fund. And so we tend to turn our fund capital over several times a year. We like making short-term loans. We think, again, that's our niche, short-term, fast closing loans that other people have said no to. And so construction completion, we didn't even talk about owner-occupied purchase money loans, which is another thing we do that most private lenders won't touch anything that's owner-occupied. And we've got a special, we call it the 11-month bridge program, and it's designed to help people acquire a home when bank financing isn't an option. Now, why wouldn't bank financing be an option? Well, maybe you're trying to compete in a tight market. You want to make an aggressive offer that closes quickly. You can use private money to do that and then refinance us out as quickly as you want.
Or you don't qualify for 2 loans.
Or you don't qualify for 2 loans. You're self-employed. We help people who would otherwise, if they had the time, maybe they need 3, 4, 5, 6 months to get conventional financing, but they really want to acquire that property now. And so for more information, give us a ring at Pacific Private Money, 415-883-2150, or go to our website. It's chock full of interesting information at pacificprivatemoney.com.
And Mary Jo Lafaye, how do people get a hold of you for questions on reverse mortgages?
I can be reached at my local office here in San Rafael at 415-259-4979.
All right. Thank you again for joining us. We're going to cut out for today. Here's our thoughts for the day. When I was born, I was so surprised. I didn't talk for a year and a half. And don't change so people will like you. Be yourself, and the right people will love the real you.
You wrote
Isn't that nice and fuzzy? What's
You
that?
wrote that first one yourself.
No, I didn't. I did not. Okay, tune in next week to The Best in Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
That sounds like an Edwin joke.
You
You
like-
guys
yeah,
are
you
so
know,
good. Y'all just you talk so fast and
it's
smoothly. Yeah. How long have you been doing this?
Since August 2010.
Oh, that's
August
right. I saw
14th.
that. That's when I moved to Marin.
I was